Do Bank of Canada interest rate hike dates affect your monetary policy? Bank of Canada interest rate hike dates. Introduction. I have recently written blogs on debt help and signs you need bankruptcy help. I have been ending recent blogs with the question, are you worried that the future interest rate hikes will make presently affordable commitments entirely unmanageable? So, I thought I would write this blog on Canada interest rate hike dates and what it all might mean in 2019. Bank of Canada interest rate hike dates. The Bank of Canada scheduled dates for the interest rate announcements for 2019 are as follows. January 9th. March 6th. April 24th. May 29th. July 10th. September 4th. October 30th. December 4th. Bank of Canada interest rate hike dates, 2018. In 2018, it was expected that the Bank of Canada would raise interest rates slowly towards the end of 2018 and into 2019. The Bank of Canada has actually hiked its trend-setting rate of interest, which affects borrowing expenses across the economic climate, 5 times since mid-2017, up from a reduced amount of 0.5%. The Bank of Canada interest rate stands at 1.75%. It was raised to that level in October 2018 and has not risen since. Bank of Canada interest rate hike dates, 2019 issues. So the Bank of Canada on March 6, 2019, decided to keep its target for the overnight rate of 1.75%. Let me explain the main reasons why. First, there is a slowdown in the worldwide economic climate. It has actually been extra obvious and more widespread than what they were preparing for. It is much more obvious and a lot more widespread than what the Bank of Canada was projecting as recently as January 2019. The higher adverse impact on the global economic situation affected their choice. Second, global trade stress and unpredictability are weighing heavily on self-confidence and economic activity. There is tension worldwide on the trade front between several different scenarios, including Brexit and nations. This results in weakened consumer self-confidence and the confidence of the total worldwide economy. If the China-USA trade war is settled, the world economic scene might improve a little bit. Domestically in Canada, there are reasons they require to keep the Bank of Canada rate where it was. Exports fell short of expectations. Business investment did not reach the anticipated level. Consumer spending was weak. The housing market was soft. Consumer spending is a big component of GDP as well as having a huge influence on the Canadian economy. The real estate market is a high-ticket item and there is a lot of industries that are affected by and depend upon a vibrant housing market. Each of those measures was either short of expectations or soft in regards to its performance. Based on both these worldwide and made in Canada influences that I have pointed out, the Bank of Canada determined they were going to preserve their interest rate and not hike it. As just recently as October 2018, the financial press was reporting that rates will gradually be climbing throughout 2019. Now there is increased unpredictability concerning the timing of future rate increases. Bank of Canada interest rate hike dates. What about the rest of 2019? We might now go all of 2019 without any price rise. It depends on future events. I believe that there are 4 main variables to watch. Canadian real estate spending, consumer spending, the Canadian oil market, and global trade. Core inflation continues to be near 2%. The Consumer Price Cost of Living Index reduced to 1.4% in January, greatly as a result of lower oil prices. The Bank of Canada expects the cost of living index to be somewhat below the 2% target for the majority of 2019, reflecting the influence of short-lived variables, including the drag from reduced energy prices and a bigger output gap. We will certainly see exactly how some of these variables may transform between now and the spring. For the July and succeeding rate statement dates, we will certainly have to see what the spring real estate market looks like. As I stated above, the real estate market is a large driver of both housing spending as well as consumer spending. Bank of Canada interest rate hike dates, what it means for you. The reality is that the Bank of Canada interest rate holding firm is great information if you are going to be buying a house this year. 5-year fixed mortgage rates have actually declined somewhat in 2019. If you have a variable rate home mortgage or line of credit/home equity credit line, the rate hold is likewise excellent news for you. Bank of Canada interest rate hike dates, what about you? Is the tension, stress, anxiety, and pain of your debt negatively influencing your health and wellness? If so, call the Ira Smith team today. We have years as well as generations of experience aiding individuals and companies needing financial restructuring. As a licensed insolvency trustee, we are the only professionals accredited and followed by the federal government to provide debt restructuring options. Call the Ira Smith team today to make certain that we can begin aiding you. We will rapidly return you right into a healthy and balanced worry-free life. We can develop a debt settlement strategy simply for you to prevent bankruptcy, where we can also make the interest clock stop ticking away at you. By doing this, all your payments go only against the principal balance owing. You can have a no-cost appointment for us to gather the necessary information to advise you on how to fix your debt difficulties. We can end your pain so that you will begin your clean fresh start, starting now.
I hope you enjoyed the video. The Ira Smith team is available to help you at any time. We offer sound advice and a solid plan for starting now, so that you'll be well on your way to a debt-free life in no time. For more information on a no-cost basis, please visit our website or call us. Our website and telephone details are coming right up now.